deal with the stock of a company that has very strong fundamentals, but also needs to deal with a serious overhang created by gigantic shareholders who want to cash out. And that's some of the questions that are surrounding Taylor Morrison Home, TMHC, the home builder that was taken public by a group of private equity firms back in 2013. Since then, this stock has been on fire. In fact, it's rallied more than 70% just over the last 12 months. On the one hand, we know Taylor Morrison reported an excellent quarter at the end of April and is growing like a weed, with orders up 33%. That's astounding, best of any that I follow. On the other hand, we also know that the company is in the process of conducting multiple secondary offerings to help its private equity sponsors, TPG and Oaktree, ring the register. Taylor Morrison's done 3 separate 10 million share offerings this year, one in January at 19, one in March at 21, and the most recent came 2 weeks ago at 23.35. So far, they haven't stopped the stock's march higher, with shares currently up a few cents from the latest secondary. In fact, they're up 23% if you bought on the January deal, up 12% if you bought on the March deal. But there could be more deals ahead. It could be difficult to navigate. At what point do the offerings overwhelm the fundamentals, even if the stock isn't dilutive and represents insider selling only? Let's take a closer look with Sheryl Palmer, the president and CEO of Taylor Morrison Home, find out more about how our company's doing and what the private equity selling could mean for the stock. Ms. Palmer, welcome to Mad Money.
Thanks. Very good to be here, Jim. Good to see you.
Good to see you. Now, first, we had some numbers this morning. April U.S. housing starts. They fell short of the consensus. We heard from you last in April. It's been about 4 weeks since that report. Are you seeing any of the weakness that were in those figures?
No, not at all. You know, I think it's very hard to look at a snapshot of a month. When you look year to date, you look where we are year over year for the first 4 months of the year. I think we're exactly where we had planned on being. Nice, you know, high single digits up year over year.
And I was actually sorry, because in the conference call, I loved it because you said the economy is progressing in the right direction. The industry drivers is for your CFO, but you remain cautiously optimistic. I have to ask you, why not be just optimistic? Because you do have the best set of fundamentals of anyone in the industry.
Well, thank you. No, I am so proud of what the business has done, and we are very optimistic. The business, like I said on the call, you know, we're seeing strength across all of our markets. We're seeing it across all of our consumer groups. So feel really good. But you always have to look at our business and make sure you kind of stay one step ahead.
Absolutely. Now, the consumer groups, we should tell people, they have 55 and over that are quite beautiful. I mean, I don't like to think that, you know, there isn't anyone who wants to do it, and then you go, and I guess it's pretty darn good, right? I mean, is that what happens? No one wants to feel like they're old, but when they get there, it doesn't necessarily mean that they're old.
Well, you need to visit one of our Esplanade communities, obviously, because there's nothing old about it. Okay. I'm right there qualifying.
Right.
So
no, many of my friends have said, Jim, don't be biased, because it's really pretty cool.
It's a great lifestyle. I mean, it's really being on vacation. I mean, our communities and that consumer group, not just in Florida, Jim, really across the board is doing so well. These are folks that know what they want, know where they want it, when they want it. We are very pleased with our 50. It's about a third of our business, our 50 plus.
What amenities do you get that's so attractive to people?
Well, we have different communities across the U.S. Some really play on the local amenities within the marketplace, and then there are some that it's a very large master plan where we'll have clubhouses, and we'll have golf courses and pools, a lot of clubs, travel. It's really about the lifestyle experience, Jim. Some of them have spa amenities. Each one's a little different.
All right. Now, sir, we talked earlier about this, something you can't control. You've got, look, terrific people who have helped you do great things, and they want to cash out, and that is certainly part of their charter. We can't control, they aren't under 50%, they can do whatever they want, and it hasn't hurt to buy on them. But what do you say to our investors? Because let's say tomorrow, after talking to you, I talked to you, and I obviously love the story, because it's a great one. What happens if tomorrow if they do a deal?
Bye-bye. You know, Jim, they've been in the stock for, we went public 4 years ago.
Right.
At some point, to your comment, this is what you expect to happen. And what we heard for the first couple of years was that we needed to get some liquidity into the marketplace. Right. So, you know, as you said, these are wonderful people, and we've been very blessed as an organization to have their leadership as owners and as board members. So over time, the market will tell us when, but certainly they've been opportunistic over the last couple of months. And as you've seen, the stock's recovered very nicely, and I couldn't be more pleased.
I mean, hopefully they'll let it lift, theoretically. They haven't sold any down offerings. So
no, and I think the thesis that they subscribed to when they purchased the organization a number of years ago is still very much intact. I think they're very bullish on the business and the industry. But the timing to take some shares off the market certainly made sense.
Fair enough. Now, we were looking at your tax situation, and we're thinking that if if there was tax relief, you have to be the highest taxpayer payer of any of the companies we've talked to. What would you do with the money? I mean, buy more land? I mean, because I know that there can't be enough. You have, about 4.5 years supply, but you've got it in the right places.
We do have it in the right places, and I think we continue to be opportunistic in the land market. I think we continue to invest into the business, invest into the growth of the business, the people, the technology, training. We'll look at our debt profiles. We'll look at M&A. So I think, time will tell. But, if in fact, I mean, the industry on its own has been really one of the highest taxpayers of any industry.
Exactly.
The
retail, restaurant,
rates, right?
Exactly.
So I think it'll be a real gift if some of the things that we're hearing about the ideas, principles come to be.
I was talking with my partners, David and Carl, today at Squawk on the Street, and we were discussing about the craziness in Washington versus a pro-business president. And I was saying, well, why would you sell this company? Why would you sell that? Why would you sell Taylor Morrison Home? They don't really relate in some ways, right? I mean, if you're worried about national intelligence and being compromised, that has nothing to do with the conscious psyche of a home buyer.
Well, I think what we're seeing within the industry and within the consumer, that they are feeling good.
Right.
They're feeling good about their jobs. We're finally starting to see some income growth.
Right.
They're not looking over their shoulders. They're feeling good about their personal balance sheet.
Right.
And that's starting to show up within our industry. We've seen volume through the job market. What we haven't seen is job growth and income growth together. It's one of the reasons I'm so excited about what we have ahead.
We also have seen finally some household formation by millennials moving out. You have homes for them too?
We do. In fact, about a third of our business is that first-time buyer, Jim. And that first-time buyers, millennials, it could be affordable, it could be professional, those could be California buyers at $800,000.
I know, that's what look, that's a bargain versus San Francisco, where some of these guys are at 1.3 for the starter homes.
That's exactly right. So we're in the high 100s in Atlanta.
Right.
So we're across, that's about a third of the business. The next third's that move up, first time, second time move up, and that last third is that 50 plus. But really across all the age groups, we have a pretty varied product, and we really look to appeal to what those buyers' wants and needs are, and that's how I think we've earned our most trusted builder award.
Excellent. I know it's going well. You've got, like I said, this is the one that has done the best, has the best land, and quite impressive what you've done.
Well,
quite impressive.
Thanks so much. So good to see you.
Thank you. That's Sheryl Palmer. She's the president and CEO of Taylor Morrison Homes, which has done remarkable things. Mad Money's back in the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.